Hello, I'm Kelly Zimmerman with eXp Realty.
And I'm Kaylee Michelle with Premier Mortgage Resources, and thank you for joining us for another Kaylee and Kelly in the Kitchen.
Yes. And today we're going to talk about some new changes for 2020.
Yes, big things have happened for 2020, which is really exciting. And I know typically we do a lot of discussion on homes and obviously kitchens and open houses and things like that. But today we're going to have a discussion about different buyers, why to use a local lender, what the changes for 2020 are, and how we think it can benefit you.
Yeah, awesome.
Yeah.
So real quick, what would be the reason why somebody might want to use a local lender versus an online lender? Do you have any thoughts on that?
I do. So there's a number of reasons why using a local lender is beneficial for you. One, a lot of the online lenders are out of your state. They don't know the regulations. They aren't as familiar with the loan products. They aren't as familiar with the loan regulations. Typically, they're within a different time zone. So if something needs to happen, say by 5 o'clock here, it's 2 o'clock there, and maybe that doesn't fall into their timeline. I mean, you can run into a lot of roadblocks. A lot of what happens in lending is very time sensitive, right? I mean, every step of your contract has a specific day at which things need to happen. And so also I work after hours.
Yeah.
Being available
Kaylee,
after
can you
5
give me a
o'clock.
pre-approval letter a Saturday at 5 p.m.?
Right, or a Sunday at 9 p.m.
Yeah.
And for the most part, I take my computer everywhere, so I can absolutely do that. I'd have to literally be like in another country away from Wi-Fi, which gives me anxiety. So, so yeah, there's a ton of benefits. There have been moments where we needed to get docs from here to there without overnighting, and I have, driven across town, picked them up in Yuba City and drove them to Sacramento, or drove all the way to San Francisco to try and beat docs for my client who was working in San Francisco, and then I got stuck in Friday traffic. But it was worth it. It's also because, this is a relationship business. I work in your community. I know your community. I get the opportunity to see you in person, shake your hand. I work closely with your real estate agent and all my real estate partners. So that's it's a benefit to get to know you, because I don't want to just do this transaction for you. I want to do all your transactions in the future.
Yeah, that's awesome. Yeah. And then I also love that because you are local, you actually have relationships with our title people, and
Right.
like the county cutoff times for recording, so that makes it smooth, makes a little bit smoother process when we're getting at the end of a transaction.
You know that saying, it's not what you know, it's who you know?
Yeah.
Sometimes there's a reason why we choose our servicers, and they become not just our servicers, but our partners and our friends. Real estate can be crazy, and things change in an instance, and having good relationships with your servicing partners can make or break your transaction. You don't want somebody who's punching out at 5, just like you don't want me to punch out at 5. If escrow or title is willing to work late, if the inspector's willing to work, on an off day, if that makes a huge difference when you're in contract.
Speaking of big changes in 2020, why don't you tell us about what's going on for loan limits this year?
Sure. So if you're not familiar with loan limits, basically there's a few entities or loan products out there, conventional, very common, FHA, which is a government insured loan. There's different limits and categories to lending. So staying within a conventional loan has benefits. Usually your pricing is better, pricing meaning rate. And that doesn't necessarily mean the purchase price of the property. That's the amount that you're lending. So don't get that mixed up. That happens a lot. And it actually went up quite a bit in 2020. And we'll have a little snippet on the video so you can kind of do a little comparison of what they were last year versus this year. And that can benefit in a few ways. I recently had a client who was looking for properties based on her VA entitlement amount. And VA went up, thousands of dollars. And when that happens, so does her availability for VA financing while utilizing 100% financing. Now, if she doesn't, if it hadn't gone up, she would have had to bring more money in for a down payment in order to meet the market at where home values are. And in this case, it worked in her benefit. Now she can actually buy something that's more realistic for the market she's looking in.
Yeah, I know living here in Yuba County, we are so close to the Placer County line, and there's different loan limits. So it's very important that you, when you're working with a lender, you know if you are pre-approved and looking at homes in Placer County and you're using a FHA loan, that is a different loan amount if you cross over the county lines into Yuba County.
100%. And you have to think about it, you know, it's really based on what homes are going for in the area, what the median incomes are. And there's a big difference between Placer County and Yuba Sutter counties because you're taking into consideration all of Rockland, Roseville, Granite Bay, Auburn. I mean, those are higher, more metropolitan areas than what you're going to see in the more rural areas of Marysville, Yuba City, and Sutter, and Wheatland.
Awesome. So one more question, Kaylee. I know that you recently helped me with a refinance.
I did.
Yes. And and I actually was able to lose PMI.
Correct.
Yeah.
Okay, so mortgage insurance is a fun thing. Thank you, House Crash of 2008. It's pretty much on any mortgage that you're not putting 20% down on. If it's based on your home value. So when what's called a loan to value, meaning how much your home is worth versus how much you owe on the property, anytime that threshold is crossed at 80%, then you can essentially have an appraisal done to see if your home is worth more than what you bought it at. So that reevaluates the value of your property, and if your loan amount is still low, like below 80%, that PMI can be dropped. Now with financing like FHA, that mortgage insurance is there for the life of the loan unless you refinance out of that product. Conventional, if it reaches, and this is based on your amortization schedule, which is the rate at which your home is paid, and so that it comes to be completely paid by 30 years. They kind of gauge it on that. But once it reaches 78%, that will drop off automatically.
Yeah.
But for FHA, it will not. So FHA is a cool program, but if you're not educated about the program that you're using, that mortgage insurance could be on there forever, and you're paying hundreds of dollars that aren't required anymore.
Yeah. But you, if you've owned the home a little while, you have some equity, you could contact Kaylee or your preferred lender and see if refinancing makes sense for you.
Correct. Yep. It takes just a few minutes. All I need is a mortgage statement, and we see if it benefits. If it doesn't, don't do anything. I wouldn't advise my clients otherwise. There's no reason, to go into the process of doing a loan if there's no benefit for you. That was also something that happened a lot prior to 2008. They would kind of turn and burn, just tell them that had benefit when it really didn't, because they were trying to stock up, fees and make money. So it's very unethical, unfortunately. And people got away with it.
Yeah.
Hence the crash.
Do we want to talk about what we're drinking today?
Yes, Kelly and I are celebrating Dry January, and it's we couldn't not have some sort of wine glass in our hands. So what are we drinking, Kelly?
So this is a mocktail. We are having some blackberry sparkling water, 0 calories, 0 carbs, and we've added some lime and persimmon. Or, I'm sorry, pomegranate.
Pomegranate, yes. It's very good, very refreshing. We'll have our glasses of wine back shortly. But in the meantime, this is a great alternative. So if you are also doing Dry January, sparkling water, throw a lime in there. It looks fancy, feels fancy. Doesn't give you fancy feelings though. Bummer. But you're way more productive. And we have a giveaway, Kelly.
So Kaylee is sponsoring the giveaway today, and we have a piggy bank for those of you that are saving for your first home purchase.
Yes,
this will be very helpful.
Also, I'm a believer in manifesting, right? So I think positive thoughts. And so this has a nice little saying on the side, and then of course we have a little Home Goods gift card here for the winner. Home Goods is also good at like TJ Maxx and a few other places, like Marshalls.
I love Home Goods.
It's addicting. Don't go in there, or do, depending on what your goals are. If it's debt, stay away. But if not, yes, this is just a fun little piggy bank. It's got a little saying on the side, and then of course $15 for Home Goods for any of your home purchase needs.
Yes. So if you LCS this video, you will be entered into a drawing to win this cute little piggy bank and gift card. And once again, we are always so thankful for all of the support from our viewers. And
right.
we are excited to see what happens in 2020.
Cheers, everyone.
Cheers.